12th of January, the day Wipro, Infosys and TCS all decided to come out with their quarterly numbers and keep people like us on their toes. We're going to be discussing the fine print of the Wipro numbers with the top management. Joining us all the way from Paris is the CEO, Thierry. We're also being joined by the CFO, Jatin, and the man in charge of HR, Saurabh. Thank you, gentlemen, for joining us here live here on ET Now. Thierry, coming to you first. I know you addressed this at the press conference, but if we can get into this. When you look at the numbers, there is one disappointment that has come in, and maybe because the market's expectations were way too high, and that certainly has to do with the constant currency growth number. It's coming at 3%. I know you always guided it for this range, but there was something that made the markets believe that it would top 4%. Are you, as CEO, disappointed, or this is all that you were anyway targeting?
I tell you, Namtara. So first of all, thanks for having us with you today. Yes, it's a fifth quarter of growth at 3% or more. I think we have, if you look at the last 3 quarters, we are growing 27.5% over, last year, 28% year-on-year growth in quarter 3. I think, if anything, I'm very pleased because, it just maintained the level of growth and speed of growth that we have built over the last 5 quarters. Can you imagine one thing, Namtara? In the last 5 quarters, we have added a third more revenue to the overall Wipro base revenue. So that is a third of the company in terms of growth in 5 quarters. And so I think, in fact, and 3% is right in the middle of our guidance. Of course, you always want more, but the reality is that it just is a continuation of the speed in growth and the focus on growth that we've, pushed over the last quarters across the organization.
No, it is because you've added all of that top line earlier. You've also been handsomely rewarded in the stock markets as well, with the stock, in the last 1 year being higher by almost 55%. But Thierry, something else I noticed in the commentary, you sounded so bullish about the deal pipeline, right? Now, if I were to look at it, in this financial year so far, you've already clocked $1.9 billion. I will take a conservative deal run rate of $600 million. You're still going to cross $2.5 billion. What I do notice is those mega deals, of $500 million, and you had them in the second half of last year, they're missing. Why are they missing? Is that something for the industry specifically? Are they scarce to come by now? What's going on?
Yeah, that's a good point. You're absolutely right. 2 or 3 quarters ago, we clocked 2 $1 billion deal, and that was a very, very new event for our organization for many years. This quarter, the strongest ever quarter in terms of bookings. Okay, so the reality is that the volume of all the deals we've closed this quarter adds up to the highest ever number. And this is what's fueling the growth. Now, unlike a year ago, this is not coming partly from a big deal, but it's coming from many deals. If I can say one thing, Namata, I think what it says is that the performance we were about to deliver a year ago, thanks to getting a wonderful mega deal, now we can get it without a mega deal. Does it mean that we're not going for mega deal? No. Does it mean that we have lost mega deals this quarter? No. We have some of these very large deals in the pipe, and it will come on top of this engine that we have built that is generating all those medium to large deals that we've closed this quarter. So that's how I see the thing. A year ago, we drove growth mainly through the win of a mega deal. Now we drive the same volume of growth, but through more regular deals. That's how I see it.
Would the corollary of that also be better pricing? We've discussed quantum, we've discussed deal sizes. So, when we talk about the quality, then better deal pricing, are you able to push for that?
Possibly. We are working on pricing. We are pushing whenever we see. We are also we're not buying deals, to be clear with you. That's for sure. So we are not giving away margins just for the sake of, winning volume. This is not at all in our strategy. We're really going for profitable type of growth. And so, yes, I think it's the volume of deals and the deals we've won in the quarters are coming with a good level of margin.
Since Thierry is talking about margins, let me come to you now, Jatin. The demand is so strong. The deal pipeline is so robust, as you're all talking about it. Can we expect margins to expand going forward?
Yeah. No, so Nayantara, it's an excellent question. The flavor of the question starts from the demand flavor, and let me also start from that. It is a once in many years opportunity for the industry, and we will continue to invest so that we are able to pick up the disproportionate share of this demand capture. Now, for that, we'll have to continue to remain invested in talent, and that would be our affirmative step forward to remain invested in the talent, which means that the margins will remain range bound as against any expectation of trying to pull up margin at any cost. So the focus is priority number one is growth, and for that, equally stated, priority number one has to be talent. And with these two priority, we will maintain margin in a sustainable range that we have spoken in past, which is about 17 to 17.5.
17 to 17.5%. Okay, that's what you're going to talk about as far as margins go. Now, Jatin, the fact is that Wipro is sitting on sizable cash. Thierry has been focusing ever since he came on board, and it has worked really well on inorganic growth. The question I have for you as well, that on a day where your board met and another competitor of yours, an industry peer, is talking about buyback, what are your cash utilization plans? I know you can't do the buyback now because the lock-in period is still there, but do you want to share with us what the cash utilization plans are?
Yeah, absolutely. Nayantara, the way we have articulated, and we have been very consistent on this, is that 50% of our net income we will return consistently over a block of 3 years, because when you do buyback, you are locked out for a few additional months every year. So we look at a block of year, and we have said that over that block of year, we will return 50% of our net income consistently. Now, after that, we evaluate on time-to-time basis what is the quantum of cash and what is the strategic need that we see in our business in terms of M&A, in terms of CapEx, and so on and so forth. And if there is an additional cash that for which we don't see a foreseeable use, then the board decides for a buyback. So buyback is a decision on the visibility of cash and future use of cash, and dividend policy or cash return policy, as we articulated, is 50% of net income. So we have been very consistent and will remain very consistent on that, Nan.
Saurabh, I'm going to now come to you. And I want to say this, I've been in the business for a long time, and very rarely during the IT, management interviews, we hear the group CFO talking about talent, right? But this is the times that we are in, when you even have someone like Elon Musk on Twitter talking about the need for engineers. How are you managing all of this? There is, of course, wage inflation. Everybody can't have the number of engineers that they want, and there is a battle on as far as talent goes, right? It's the best time maybe to be an engineer. But nevertheless, the high attrition rate at Wipro of 22% plus, how are you going to bring that down? Has this peaked out, or do you have to go to Jatin and also make a case that we've just got to pay a lot more? I don't know whether this with BMW Superbikes or Mercedes. You tell us.
Thanks, Nandara. Good question. And as Thierry had alluded earlier in the press conference, that talent is what going to differentiate companies in the future. And I think we are very, very focused in making sure that we are able to ensure that the supply side does not impact our growth. Today, there is a deficit between the supply and the demand. And we will make sure that, and we are all endeavor that we should not, that should not stop us from growth, which is evident in what we have done over the last 5 quarters. 3-4 things. One is we are on the attrition side. We had called out last time when we spoke to you that we see this gap to supply deficit to continue for a few quarters and heightened attrition over the next few quarters. It will take some time to normalize. We are confident to say that it is stabilized in this quarter and will get moderated in the coming quarters. So I think that's one positive which we are seeing. Second is we have made sure that we have enough supply and we have doubled our intake of freshers in 70% more in this fiscal and another 80% more in the next fiscal. So we are very clearly driving a high demand focus with fresher intake. Third, as you would have seen, the last 3 quarters we have added net headcount of 10,000 people plus. That's been the highest. 34,000 people have been added, in this fiscal alone, even given the heightened attrition. So we are very focused that supply side constraints will not be a challenge from a growth perspective. We will do what is required. Having said that, yes, we are very focused on attrition. We know it's a challenge. We need to bring it down. And enough steps we have taken, both in terms of, spreading our reach, making sure we ring fence the right people, make sure we pay people well, competitively, we make sure we make the job challenging, we make sure we stay engaged in this environment of hybrid work or completely remote work. So those challenges we are facing, but we are confident that this journey will be good in the coming quarters.
Saurabh, you're saying you will do whatever it takes, you will be competitive, but the market, the job market for the IT pack, when you're also, competing with cash guzzling startups backed by, private equity and venture capital, they're throwing all kind of crazy money and perks. Will Wipro do the same?
So, Nandra, we genuinely believe that, retention of a talent is not only driven by money. Money is important. And, we must be competitive in the marketplace. However, it also is about the environment which you give, the learning which you are giving, the career which you are providing, the entrepreneurship of this, the higher purpose which we have. I think it's a combination of a lot of things which Wipro offers today, which differentiates us from a lot of others. And we are confident that along with the right competitive compensation, and all these other attributes, we will be able to have a better retention strategy in the coming quarters. And we're just playing out.
Okay, so let's see if, you peaked out at 22.5% or not. I guess we'll only get to figure that out when the financial year comes to an end. Now, Thierry, I'll come to you for the last question. I know you're joining us from Paris. You tweeted about how nice it was to meet everyone after over 1 year. But as we sign off, the three of you, that is Infosys, TCS, Wipro, decided to make our lives more miserable by coming out with their numbers on the same day. But what we've seen is, a buyback from TCS. We've seen gangbuster numbers as far as Infosys goes. As far as Wipro goes, we've discussed the numbers in detail. We've talked about that return on the stock price, almost 60% in a year. What's your message for shareholders?
Yeah, the message for shareholders is, we are absolutely in the race. We are a growth-obsessed organization. and we will continue. We have a lot of ambition and a lot of expectation to continue to strive in the market.
And work from home, you see that lasting out longer. It's great. It would be great to have Wipro's view. You know, we've seen every company now delay coming back to office and come out with a hybrid model. But, you know, as a leading IT company out of India, where do you see work from home, work from office progress?
We are an accommodating company from that standpoint. We will drive agility and make sure that we are balancing personal priorities of our clients and priorities from our employees. At the moment, given the surge in cases in most of the country, we've decided to close all our offices for the next 4 weeks so that people stay at home safe and remain away from health challenges.
And with that, I'd like to thank all three of you for taking the time out and joining us here on ET Now. It's been a good quarter, and wish you all the very best, and see you again in a couple of months.
Thank you.
Thank you. Thank you. Thank you.